Hello everyone and welcome to my channel, Saving Cash with Ash. I'm Ashley Breemers and today we are going to talk about money management. This topic is so huge and I can talk about so many things, but I'm going to just stay to one topic and talk about the 50-30-20 rule, which I think is very important when you're just wanting to manage your money on a monthly basis. So basically, what it is I broke it into three different categories. 50% is spending, 30% is splurging, and 20% is savings. But before we get into this topic deeper, grab yourself a drink, water, wine, whatever gets the job done, and let's talk numbers. Okay, going into the 50-30-20 rule. 50% of your take-home pay, so your net pay, the amount that you actually receive in your bank account each month, should be spent on the necessities to live. So that includes your home, mortgage, rent, your utilities, groceries, health insurance, car payment, all of the expenses that you pay each month that you need to just get by and live. 30% of your take-home pay can be used on splurging, like entertainment, going out to eat, shopping, concerts, whatever you enjoy spending your money on when you splurge. And 20% of your take-home pay should be used and put aside for savings or paying off debt like student loans. So let's talk about this a little bit more. Some people might go, Ashley, I live in California. The cost of living is super high up here and I spend way more than 50% of my take-home pay just to live. Okay, I get it. I hear ya. But if that's the case, then you just need to pull some of that money out of your splurging and therefore can't go out to eat as much or spend money on other entertainment things since it costs more to just live in your area. Other people might go, Ashley, 20% of savings, that's way too much. I can't possibly do that. Okay, well, have you tried putting a certain amount of money from your paycheck into a savings account? That way, as soon as the money hits your bank account, you're not off spending it and whatnot, that if you actually put it into your savings account, you might actually not touch it. It's a good food for thought. But another item is some people are like, I don't know how much take-home pay I have each month because I get paid bi-weekly and some months I get paid twice and other months I get paid 3 times. Okay, that's fine. Totally get it. Take your annual amount that you would get paid. So say you get paid $100 every 2 weeks, multiply that by 26 and you'll get your total amount for the year and then divide it by 12 to figure out your monthly take-home amount. Okay, let's get into an example with numbers. I know that everyone learns differently. So some people are list people and would create an Excel spreadsheet and break down, put their take-home pay and then break it out into these groups. Great. Some people are picture learners and actually like to hold the money and put it in 3 different pots. So if that's your case, okay, get your paycheck and break it up into 50-30-20 into little buckets and then pull from each bucket. That works too. But let's go to an example. Let's say you bring home $3,000 a month. 50%, $1,500 would be used to pay for mortgage, rent, your car payment, groceries, all the necessities. 90% would be used on splurging, so that you could go out, get drinks, buy clothes, whatever fun stuff you like to do. And I feel like that's a decent amount of money, getting your coffees, doing all these other expenses, your nails done that you may not need to do. Okay, $600 a month should be going to savings or paying off student debt. I know it seems like a lot. You can do it. So here's your food for thought today. Everything is about priorities. This same rule applies on money management and budgeting as it does if you're wanting to lose weight. If you go, Ashley, I want to pay off my student loans. Okay, it's gonna take some discipline, hard work, but you can do it. If you abide by this rule, or even put more of a percentage to savings. If you go, Ashley, instead of 20% of my take-home pay, I wanna put 50% of my take-home pay to savings and paying off student debt. Do it. That's so awesome. You can do it. I've seen and read a whole bunch of articles about people that have paid off over $100,000 in debt. Obviously, that didn't happen overnight, and obviously they had to stick to their priority and cut back on things. If you want to save more money, you obviously can't be living in this huge mansion and buying all this elaborate stuff. If you truly want to save, you've got to cut back and stick to certain rules, just like if you want to lose weight. You can't expect that you're going to lose weight if you're not going to the gym, not working out, and eating a whole bunch of fast food all the time. Same thing with money. If you're spending a whole bunch of money on non-necessity things, then, and including that, you can always tone down your living expenses. Then obviously, how are you going to expect to save unless you get a big salary increase? I found this on Instagram, this picture, and it was really eye-opening dealing with priorities. And I'm not for sure who created it because I saw a whole bunch of stuff, so I can't credit the source, but here's what I found, a picture, and it was truly eye-opening about priorities. Healthy grocery shop and making meals at home, $100. Too expensive, I'm too tired for that. I totally fall into this category and get it. But having a dinner night, spending $100, reasonable, and I had a really fun time. Well, obviously, going out one time for $100 versus making 5 days or a week or longer worth of meals, what's obviously more cost effective? Putting aside $100 a week for savings, or have a weekend night out drinking, $100. Well, $100 a week in savings, I can't do that, actually. That's way too much money versus spending $100 a night every week drinking. That's totally doable, and you wouldn't bat an eye at it. Hiring a financial planner for $150, crazy talk. I don't even know what you would get with it, but so worthwhile in the end. Or spending $350 on that Gucci belt that you just got because everyone has it, and of course you gotta have it too. Okay, let's think about this in the long run. The Gucci belt thing over, and how much money would have you have actually gotten, and you're trying to sell it, if you would have went with the financial planner? Just a food for thought. And putting $1,000 into the stock market to invest, that's outrageous. I don't even know what I'm doing, but at least it's a start. You could get some interest versus spending $1,000 on that new Apple phone. Okay, let's get real. Cell phones are crazy expensive. And what are you gonna do when the new one comes out? Buy a new one. So if you would have just put the $1,000 in the stock market, you actually would have came out way ahead and maybe could even buy your new upgraded iPhone for free with the money that you've earned. This is another one that I fall into, and it's really, really bad, but 60 minutes going to the gym, don't have time, too tired, versus 60 minutes watching Netflix. Where did the time go? Let's watch another one. So easy. So as this shows, everything is about priorities, and if you truly do want to save money or pay off debt, sticking to the 50-20-30-20 rule is essential. Give this video a thumbs up if you liked it, subscribe to my channel, and Instagram, Facebook, and follow them. And I will see you guys next time, a little bit more financially aware. Bye for now.